Europe's firing back against President Trump's tariffs, but he insists the impact is tremendously positive. It's Wednesday, 12th of March, and here's what you need to know. Bourbon whiskey, jeans and Harley-Davidsons are all on a hit list of iconic American products that will be hit with a new tariff in Europe from April the 1st. Farm goods like beef and poultry will join that list from the middle of April. It's Europe's response to President Trump's 25% tariff on steel and aluminium, which kicked in this morning, and more than $26 billion worth of US exports will be affected. Our number of the day is $990. That's how much more a metric ton of aluminium will cost you this morning if you bought it in the US compared to if you bought it in London. Producers are passing on as much of that tariff to the buyer as possible, and that's very bad news, especially for US car makers who imported about $25 billion worth of aluminium car parts last year. The countries most hit by this are China, Mexico and especially Canada, although you may have seen that President Trump backed down from a threat to double the tariff on Canada last night. So the new fear rolling the markets is that these tariffs could lead to a recession. President Trump dismissed that in a meeting with CEOs last night.
I think, number two, the tariffs are having a tremendously positive impact. They will have, and they are having.
But what markets are worried about is that tariffs will lead to higher inflation and lower confidence from consumers, who then rein in their spending and hit economic growth. Watch out later for a key sign on whether that's already starting to happen. Consumer price inflation for February is out later, and it's forecast to come in at 2.9% year on year. Bear in mind, though, that it's probably too early for tariffs to really feed into that number. And have a look at our chart of the day. This is the euro against the dollar. It reached its highest since October this morning. That's partly because markets are optimistic a ceasefire can be brokered in Ukraine, but mostly it's about the dollar falling against all other currencies. Lots of analysts think the Trump administration is deliberately trying to drive the dollar down to counteract some of the effects of tariffs, but this is starting to look more like investors are betting on a weaker US economy. And that's what you need to know this morning.